Gold has finally seen a massive breakdown till towards 1950 levels, and in last week's analysis we discussed that below 1974 levels we can see it hitting 1950 levels directly. Precisely achieving 1950, it has seen a recovery and closed the week at 1978 levels. So now what to expect next week? Which position you should take in order to profit? We will see with the help of charts and indicators. Do not forget to like, share, subscribe and comment. Do not forget to press the bell icon which keeps you updated with the twice a day daily targets which I share for gold. First with the Asia session, next with the US session. 2 updates in a day. Definitely it will help you profit. Also, you can be part of our free Telegram channel where you get the live market updates. The link is mentioned in the channel and video description. Let's start in this analysis. First we look into charts followed with indicators. Towards the end we will see the trading strategy and levels to watch out for next week. Let's start. Firstly, on the weekly charts, first of all, it was trading here in this channel so far, and last week it has given a breakout. Now, with the breakout, the levels it has seen, first of all, see here multiple candles getting the support and the resistance at 1950 and 40 levels. Precisely, it has achieved 1950 and bounced back and tried to recover. However, remember it is still a breakout and can continue for a while. But what to expect? See, we have seen massive bearishness throughout the week towards and bounce back towards the end of the week. Does it mean that it can start bullish? Yes, it can try to recover a little. How far it can go? Till 2020 again, I will not consider this as bullish. Till 2020, there could be a recovery. And the first resistance is still towards 2000 levels where it is going to see massive stronger resistance there at 2000 levels. Now 2000 levels are going to be critical, and then 2020. If these two levels are breached, then you can say that the gold has reversed and it is going to fly high. This is the first observation. Second observation, since this is a breakout candle and if you look at the body size is greater than half the complete candle size, which means that the bearishness is still there, the bounce back is minimal, and it can continue with the breakout. It can continue with the bearishness for a little while. And also if you track the movement, first of all on the weekly charts, see triple bottom here on the weekly charts, and since then the rise, consolidation, then this breakout, then double bottom here at 1800, rise, consolidation, and then this breakout. Now see, this is a trend which it is trying to follow, and this is the channel in which it is trying to trade. Now 1915 levels is something I will watch out for. If it continues its downward journey from here, this is the zone 1915 and 1900 which I will watch out for. There is a probability that on weekly charts you can see there is a gap at 1870 which it might try to fill in near future, not possibly next week, but yes, in near future it might. If it stays below 1915, the target is going to be 1870 levels. And remember, it is still going to remain bullish. It is not bearish at all. It is going to still remain bullish till the time it breaks past 1800 levels. Only below 1800 we can consider that the trend in gold has reversed. Now, also if you look at weekly charts, you will find, first of all, let's have a look at the near term, long term charts here. See, with the support here, we have seen a rally in gold here. Then it consolidated here. Then the next rise, sharp drop, then the next rise. Now some call it a triple top. I'll call it a breakout still. See, first, second, third, nearly 2075, 2060 to 2080 levels. In some brokers, the breakout till towards 2085 was not seen. The highs is still at 2075, 2070 levels, and hence we can say this is a triple top here. But still, if you look at the movement what gold has shown, it is still trading very much bullish, and hence till 1800 we should not consider this as bearish at all. I will show you why with the help of indicators later. Now look at the daily chart. On the daily charts, similar is the reflection what we saw on the weekly charts. This was the bullish channel, this is the breakout here. And also if you look at the zone here at 1940, 1950 levels, the resistance here, the support here, and this zone is going to play a very important role for gold. and hence any breakout below 1940 should be considered as a bearish move. And then I will look into the bottom of the channel at 1915, and below that we will see a further breakdown to 1870 levels in the near future. Now let's look at the last candle for the last week. You can see lower highs, higher lows, zone of consolidation. And this was a good bullish candle here. And hence for next week, see what could possibly be happen here is we can see a retracement for a couple of days or more. And then from there, see till the time it stays below 2000 or 2020, we can always see a breakdown here. Now remember, there are only 7 trading sessions left for the month, rather 8 trading sessions left for the month, and possibly it may try to close the monthly candle in green or with the doji levels. I will tell you what are those levels. Now if you look at, yes, there could be a possibility of a retracement, and if you look at this, it is trying to trade in this bearish channel, and hence any rise till 2020 levels should not be considered a reversal but a retracement. Now why 2020? You can see this was the zone here, previously it retraced till here, hence this is the zone beyond which if it breaks past by, that should be considered a bullish move. Else there is every possibility that we can see smaller green candles taking it on the upside till towards 2000 consolidation here, and then a breakout on the downside. But what if it breaks past 2020? You should take it as a very good bullish move, which is going to take it for 2050 and then 2100 levels again. Now this is on the daily charts. Now let's have a look at the weekly charts here. Monthly charts, sorry. Now see on the monthly chart, so far we have seen higher lows, higher highs beautifully aligned together. If you look at the candle, previous monthly candle, you will find very small body there and a very big wick on the upside, which is also indicative that the bullishness was diminishing there on the last month. And this time again, achieving higher highs, we have seen a good pullback. Now what could happen this month here is, it can show you a pullback till towards 2020, close the month at around 2000 levels or 1980 levels in green, and from there a little retracement for next couple of months before a rise can be seen here. But yes, I will still remain bullish. Now on monthly charts, let me show you why. See, this is the monthly charts, a good strong pole, then a bearish flag, and then this breakout. Now this breakout on the monthly charts indicates that it can sustain the bullish movement for a little while. Yes, there could be a retracement, I won't deny that, but however I will still remain bullish on gold till the time it respects the 1800 levels. Only bearishness is seen if it breaks below 1800. We can say that the gold has reversed here. Now on the monthly charts, see the bottom here is little far below at 1840 1870 zone. This is going to be the bottom here. 1870 definitely a gap filling zone move, and then 1840 levels, good support levels, 1836 rather, and this zone is going to be important for gold. If it breaches below then 1800, then only you can say it has taken a decisive direction and there could be massive bearish candles. Chances are less that it is going to drop. I will tell you why now with the help of indicators. Now look at indicators. We have discussed this several times in our previous analysis. See, whenever it tries to move out of Bollinger Bands, it has seen a pullback. This time also it tried to stay beyond the Bollinger Bands and we have seen a pullback here. That is what has happened. And at the same time now this outward move, this move outside Bollinger Bands definitely will help the bandwidth to expand. Now if you look at the moving averages on the downside, the simple moving average 20 period is situated at around 1820 levels, which is the previous support level here. At the same time, if you look at the moving averages, these are trading with divergence on the monthly charts. And since long these have diverged. Pre-COVID era itself, these have crossed over and trading with divergence and are still bullish. Now, if you look at the stochastic on the monthly charts, is slightly overbought, and possibly for a couple of months it can try to retrace a little before looking forward to an upward move. But most importantly, we have to observe MACD. The MACD here, see, it crossed over here in around 2017, 2018. Sorry, this was the crossover here at the lower levels. Then this move, second crossover here at near about 2019, and since then it has traded with divergence, traded bullish. Now after trading bullish for months, almost 2 years, it has taken a U-turn, has hit a bottom. Now if you look at MACD, this is crossed over, trading with divergence, trading bullish. This is the third bullish candle here, and this is still divergent, still looking upwards. Hence possibility exists that this month it may try to close in green or in doji, then for a couple of months try to retrace a little, try to converge a little, and then possibly continue with the divergence, increasing bullishness there. RSI is almost flat here. Now also if you look at RSI, see this is the pre-rise zone, then this sharp crater, and now it has come back to same level. So even if it tries to retrace, the retracement is going to be minimal, and possibly it can try to stay in this zone itself. So this is on the monthly charts. Let's have a look at the weekly chart. On the weekly chart, see the moving averages are trading with divergence so far, and we have already seen, see this was the divergence from the moving averages here. It has converged till here. This is again an extreme divergence from the moving averages. Now possibility of a conversion exists, and it is high. And hence, first I will look forward to this zone at 1930-40 levels, and then till towards 1870 levels. So yes, this can try to do that because the divergence has increased and possibility of a little convergence exists. Hence, we have to be watchful for next couple of weeks. Till the time it stays below 2020, I will not consider this as bullish. Yes, there is a possibility of a retracement. However, till 2020, do not consider this as bullish. Stochastic is looking down, trying to trade bearish. Now look at MACD on the weekly charts. You can see the crossover here and the high here. Now see this. Previously this was the rise, then a sharp dip has been seen. Now this is an extended rally, and this time if it crosses over for next few weeks, it can try to pull the prices little down and try to come back till here before bouncing back again. So yes, this is also indicative that there could be a little more bearishness in the coming few weeks. RSI is also near to the highs and right now looking down. Now let's have a look at the daily charts. Now on the daily chart, see the moving averages have started to converge. That is first point. Second, this is trading outside Bollinger Bands. This traded outside Bollinger Bands try to show you recovery. But the 50 period exponential moving average, now situated at around 1985, has given it a little resistance. Now what it can try to do here is, it can try to possibly converge till towards the 20 period moving average, which is situated at around 2000 levels. Definitely a very good resistance level. Hence a little rise till here before looking forward to a drop cannot be denied here. So I will definitely watch out for around 2000 plus minus 5 levels, and then 2020 level. These two levels it has to respect and break pass by in order to confirm the bullish reversal. Now on the downside, definitely this move will expand the Bollinger Bands a little for the next week, and you can see the support here at 1940 for the 100 period moving average is going to be very extensive. So these levels we had discussed this last week, also 1950, 1940 you should watch out for. Beyond that there is a very good drop which will take it for 1915 and 1870 levels. Now why possibly there could be recovery? See the stochastic has come to oversold levels. This could try to recover a little till 2000 before looking forward to a drop again. The MACD on the daily charts is still trading with massive divergence, massive bearish. At this point we had discussed that overbought levels are done. Possibly there could be a little retracement. It took its time, but yes, finally it's done it, and it has come to zero levels. Now see the candle size, it is almost flattened, and last two candles you can see we have seen diminishing. The candle size started to diminish, means couple of retracement candles, a few more retracement candles can be expected. RSI trying to look upwards and it is very near to bottom. It may try to retrace a little. Now we have seen the charts, we have seen the indicators. Now let's have a look at the trading levels and strategy for next week. And before I provide you the levels, I have two services to offer. First of all, we have a mentorship batch. The 22nd batch starts on 1st of June, where you learn all the strategies, tools and techniques to come out and decide a profitable trade and become a profitable trader independently. You can join this mentorship batch. Reach out to me for more details. My Telegram and email IDs are mentioned in the channel in video description. Also, you can be part of our signals channel. Trading as per the signals, definitely you can benefit. And the next point is, I do not approach, I or any of my social media handles, do not follow anyone, do not approach anyone, do not message anyone And hence anyone coming to you on my name asking or seeking investments, promising you multifold returns, remember, it is not me, it is a fraudster, it is a scammer who is scamming you. Please don't deposit any money to anyone without confirmation from the official Telegram handle or the email ID mentioned in the channel and video description. Please note this disclaimer, and also remember, there is no easy money, there is no shortcut to a multifold return in a quick time. It is all hard-earned efforts, and anyone who is promising it to you will first do it with his own money and will never seek an investment from you. Please mark my words. Please note this. Anyone approaching you on my name, report him immediately to cybercrime. Let's start with now gold. Next week I will recommend you to buy here at 1985. Then you can expect 1991 and 1998.5 levels. Now see why there are nearby levels. I am telling you because there could be a little retracement here. Yes, it can try to fly for 2004.5 levels, and in fact if it trades beyond this, first of all, this zone is going to remain a very critical and important zone for gold. It can try to definitely retrace till here. If it stays above 1985, certainly you can expect a little more bullish move, where we can expect in fact 2005 levels, 2010 levels, and then 2018 levels. Now till here it's fine. One can still expect a reversal, but if it breaks past this, and stays above this, you can expect that there could be, in fact there is a little here at 2025, and if it breaks past this, you can expect 2050 and then 2075 levels again. Remember, we have to consider every scenario in our analysis. It is not just what I think and what analysis say. One news from the markets of debt ceiling not getting extended and the gold is going to fly high, and hence you should be very, very cautious there, and hence keep booking profits and keep re-entering. Just not get hold of it, or just not try to be smart with a entering a short entry at a higher levels. That could be potentially dangerous until and unless it is below 1985 levels next week before the retracement. Now on the downside, where to sell here? You can sell here at 1971 levels, below which we will see 1964, 1952 levels, and if it breaks past this, certainly we can expect 1941 and below if it breaks past. Now this is the most important level. If it breaks past 1941, you can expect this time 1915 levels. We have already seen this last week. Whenever I mark a critical level, beyond this a good move is definitely seen, and that is why we can keep distance beyond this, beyond 2025, 2050, below 1914, it is 1915 levels. So you should note out these levels and wait for a clear-cut direction beyond these levels. Any closing above this certainly will bring bullishness or bearishness. Now below 1900, it is again going to give it a very, very good bearish move, where we can see it hitting 1900 or in fact 1870 levels also. Take your trades accordingly. Trade with a stop loss, trade with a trailing stop loss. Do not forget to like, share, subscribe and comment. Join my mentorship by Join My Signals channel. Reach out to me for any of your trading or training queries. My Telegram and email IDs are mentioned in the channel and video description. Thank you very much. Have a great profitable trading week ahead. Thank you.